Brad Thomas with The Street. I'm joined today with Tom Lewis, CEO of Realty Income Company. Tom, good to see you today.
Good to see you, Brad.
Tom, Realty Income turned in another consistent quarter of performance. On the earnings call, I heard that Realty Income sourced around $15 billion of triple net or freestanding properties during the second quarter. That seems like an amazing amount of property that you sourced. How much did you close, and how did you source that much property?
It really was an active quarter. We did look at the $15 billion that we sourced during the quarter. Out of that, we bought 190 properties for about $738 million. So about 5% of what came in to look at, that is our type of property under long-term leases we bought. When you couple that with the first quarters, that takes us to about $866 million in acquisitions this year, which was the reason that we've moved the guidance 3 times on how much we would buy, from $550 million at the beginning of the year up to $1 billion a few weeks ago, and now $1.25 billion. It's a very active year.
Tom, Realty Income's balance sheet has always maintained a very healthy standard. Can you tell us how that balance sheet looks today and how your company is deploying that balance sheet in terms of its business model?
Well, being a company that is really about producing dividend income for investors who are conservative, we try and keep a balance sheet that's appropriate for that. Company's gotten large. We're about $8 billion today equity market cap, about $13 billion overall market cap. And the dominant form of capital on our balance sheet is equity. We're about 64% equity, or shareholders' equity. We're about 5% preferred, and about 31% that is in bonds and mortgages. And we try and keep the number not much higher than that. It's a very conservative balance sheet. We also make sure that any bonds or mortgages that we have tend to be fixed rate, and also we don't have any near-term maturities. So I think the balance sheet's very strong, and I think if you compare it with those that may use more variable rate debt or higher levels of debt, that we're in very good shape today. We also have good liquidity with a $1 billion credit line to make acquisitions, and that has no balance on it today, so in very good shape.
Great, thanks, Tom. In terms of rising interest rates, that's been a really hot topic today, and Mr. Market has really been sensitive to that conversation. Can you tell us how your company is prepared for a rising interest rate environment?
I think it's critical for all investors. We've had declining interest rates for 30 plus years, and at some point that will change, and each company needs to be prepared for it. For us, I think there are 3 things we focused on. First are our tenants, those 194 tenants. We've done an exhaustive review of them using 19 metrics to look at their preparedness for rising interest rates and make sure it wouldn't significantly impact their ability to pay rent to us. And so we've been selling off the weaker properties and tenants and really adding investment grade tenants with companies like Walgreens or CVS or FedEx. Well, certainly if we're concerned with the balance sheet of some tenants, then we want to watch our own. And as I just talked about, our debt is long-term, it's investment grade, it's fixed rate, so we're in good shape there. Primary area is then looking at our cost of capital, or what the money is charged to us that we use to go and buy properties, and what the return is off those properties. And if interest rates go up, cost of capital will rise. However, generally what happens is the yield off the properties we buy also rise, so that spread between our cost of capital and what we're getting off the properties will probably adjust. So we think we're well prepared, but it is something companies really need to focus on today.
Thank you, Tom. And your Realty Income has a very simple ticker symbol O, and obviously your value proposition is your mantra, the monthly dividend company. Can you tell us, why you call yourself the monthly dividend company, and how is that important today?
Realty Income was founded in 1969 with one purpose, and that is the ownership of real estate under long-term leases used to pay monthly dividends to shareholders. So it is the purpose of the company. All of our employees know that all of their activities every day need to be in the pursuit of buying properties under long-term leases that can generate this diversified cash flow we can use to pay dividends. So it absolutely is our focus today. We've been paying dividends for 44 years since we went public in 1994, 19 years ago. We've raised the dividend, I think, 72 times, and the dividend's grown from 90 cents a share to today about $2.18 a share. And if you look at the second quarter, which we just released last year, dividends paid were about $2.18 a share on an annualized basis. That's up from 90 cents a share when we went public. So it really is the focus of the organization.
Great. Well, Tom, thanks so much for joining us today, and look forward to seeing you next time.